Good morning, ladies and gentlemen. Welcome to the Monday Morning Minute. It is December 5th, 2022. Pretty good week for stocks last week. Can't complain. They were up. U.S. stocks up a little over 1%, depending on which index you were looking at. International is up just a touch, and so were emerging markets. Fixed income in general was a little bit of a mixed bag. We did see the inversion on the yield curve get a little bit more aggressive again last week. All of this has to do with the speech Fed Chair Jay Powell gave in the middle of the week. A lot of people were interpreting that speech as him not really pushing back on getting more dovish, as it were. Ultimately, if you kind of look behind the curtain on what the plan is, all they're doing is slowing the pace of yield or interest rate increases from 75 basis points to 50 basis points. One important thing to note is he did say the terminal rate needs to be higher than they originally predicted, which means a Fed funds rate of somewhere between 5 and 5.5% is what is at least implied by that language. That would be higher than most people were expecting and higher likely than the market has priced in at this moment. So that could be challenging for things like mortgages, for example, and put additional downward pressure on home prices moving into spring and summer of next year, which are the prime selling months. In terms of data this week, we're not looking at a whole lot. I think more importantly, we're going to be watching how the COVID lockdowns are affecting China, what's happening in Macau, and then also focusing on a recent trend reversal in precious metals, especially gold. Looking a little more attractive at this point, at least from a short-term perspective. So going to be keeping a close eye on the correlation of gold, equities, and U.S. dollar strength. Remember, hope is not an investment strategy. Have an awesome week.